financial literacy coach, and I wanted to share something really awesome with you tonight. Hopefully you got a chance to see a video that I shared on Facebook earlier. It talked about millennial debt and how we're huge in student loan debts, and wages aren't keeping up. So I just wanted to kind of break that down and kind of relate that to some of the previous lessons and messages that I gave you earlier. So hopefully you find some value from this. So talk about millennial debt. So this is for us 80s babies, 90s into the 2000s. So the 20, 30, 24, it's like 35, 36, realm, early 40s. So us 80s babies out there. Right now, a lot of us walking around with the sad face, with the frowny face, and there's some big reasons why. Average is about $40,000 to $50,000 in student loan debt. That's pretty cool. Going to school 4 years, 5 years in some cases. Some of you, I'm sure took it to even even further studies. Master's degrees, doctorates, things like that. So on average, 40 to 50,000. Looking at cars, trying to keep up with everybody. New hot cars, 25 to 30 grand in debt. So that's what you're driving around with right now. Pretty great, right? And then 15 to 20,000 in credit card debt. So swiping our lives away. Visa, MasterCard, Discover are owning us right now. So take this back to an earlier lesson. I talked about 4 different pillars. With protection, debt management, emergency funds, and investments. So right now, our debts are managing us. We're not managing our debts. That's the challenge here. So how does this relate to protection? I'm going to kind of break that down in a few minutes, but taking a look at all these right here and then comparing it to what's going on with what's the expenses here versus what's coming in, the income. So on average, 35,000 at our JOBs, right? Just over broke. Jail's operating as a business. Jobs are great. I'm not knocking jobs, but how is it that we're going to be able to knock off this mountain here and other things? This isn't even accounting for just other daily things of living you need. But how is this going to really make up that difference? So you want to think about this is what it is now, and then why it happened. Because a lot of us coming out of school early 2000s, we walked right into our Great Recession. So there was no jobs, there was nothing really available for us, so we had to take the first thing available, the first thing that we could get, and that was pretty rough itself. So dealing with that, our parents really kind of having the benefit, they kind of going through those golden years of low credit rates, low interest rates, low education, and not really being properly prepared and thinking about our future. Now, myself, my wife, people that we know, we're looking at our situation now like, okay, we gotta do better and make sure we, we set the standard for our children so they don't have to go through what we went, we're having to deal with, right? So debt is a crippling thing. And so managing your debt, how does this relate, like I said, to protection? Well, think about these two things right here, age and health. This is what protection is based on. So ask yourself this: will you ever be younger in the future than you are right now? The best time to get yourself protected is when you're younger. You're healthier, you're stronger, and really any company really looks at just the number. They factor in a couple of things, but when you're younger, it's almost like having almost like a free pass to it, because you're just gonna get it and you have more time to let that money compound. And I talked about like the 7702 plan, that IUL, the Index Universal Life. It's a really great strategy because not only do you get to protect yourself, but you can use it as a cash savings vehicle, dump a lot of cash in there. Now you might be thinking, well, I don't have a lot of cash. Well, I'll talk about that in a second. And then your health. So when you think about, do people generally get healthier as they get older? Typically not, right? So you're not ever going to be, younger and healthier than you are right now. So why wait? Why procrastinate? Procrastination is a killer, just like debts are. And think about another situation where, I talked about 3 things are going to happen in our lifetimes. 3 things as far as us all dying at some point. Sorry, don't mean to bring it down, but it's going to happen. Us, possibly becoming disabled. Either myself or you are going to become disabled in our lifetime. We're going to need long-term care. And then thinking about taking, using that money, kind of leveraging it and being able to, pay off some of those medical expenses so you don't have to go into more debt. So you don't have to sell off the car. So you don't have to, ask friends and family for, the GoFundMe stuff and all that kind of, all these other things that people do. So, and then you want to think about, living a long time. Now you have another place to save that money and then draw it out as almost a retirement fund. Most people now, us millennial parents, we're thinking, oh, we have to, save up for our children, but our first thought is, paying off our debt. How is it that we're not thinking about saving for our kids versus, worrying about, paying off this person and Sally Mae and whatever other company it is that we have our debts tied to. So, just consider that, hopefully. So age and health, those 2 factors right there, pretty serious and pretty severe, if you're not taking advantage of what you have now, because things like anything can happen. Motor vehicle accidents happen, health concerns happen, and then all of a sudden, there's people that I know that, could have been on the right path as far as, having a protection plan in place and using that as their way to, lower their debts. They waited, and now situations happen, new symptoms, new this, new that, and now they're pretty much uninsurable. So that's a shame right there. So what's the solution here, right? Obviously, make more money. So some people think, all right, I got to take another job, and that's fine, but you're still exchanging your time for money. You're not really having the lifestyle that you want. Now, what if you're able to create a business for yourself? Is creating a business easy? No, it's not easy, but think about your other choices. You're in your current situation, stuck in your debt, but you have the advantage of your youth. But your advantage is also your disadvantage because you think, hey, I have enough time. I can do it whenever I want. It's going to just go away. It doesn't go away. It's going to get passed on to somebody. You're going to have to, start doing something now to build a legacy versus a liability. If that makes sense. So what if you're able to build a business for yourself? What are you able to generate an extra $1,000, $2,000? How much of an impact would that make on your life? Would it help a lot with, taking care of some of these school loans and taking care of some of the car loans and taking care of some of the credit card debts? Pretty sure it would. So, if you have some questions about that, and I'm happy to answer them, you can leave a comment and shoot me a like. I'm going to upload this to my YouTube channel, so feel free to subscribe to that as well. Leave me any comments if you have any concerns. If you know anybody that might benefit from this. I'm going to have some more information tomorrow. I just wanted to kind of give you a little flavor today, just to think about, these things that we really don't talk about. We all know that we all have friends and people and loved ones that struggle with, some of these situations. But now it's time to really talk about it. It's time to really do something about it and be proactive rather than be reactive. So hope you found value from this, and I'll see you next time. Have a great night.